All right, we are live. Hello, everyone. Welcome to our amazing panel that we have here. We're going to be talking about closing the capital gap for women and other underrepresented entrepreneurs. We have some amazing guests here today. I will be your facilitator as well as, participating in this conversation. So super excited that you all are here and have joined us. So just some housekeeping reminders if you are just joining. We have the chat on your screen that is on the far right. So if you have any questions, I know this way, I don't know which way you can see me. If you have any questions, comments, mainly for comments, add that in there, introduce yourself if you want to the group. And then on the bottom of your screen, you will see a section that says ask a question. So in that section, if you do have any questions, please make sure to add them in there so we can address those throughout the event. And that's about it. You can also see other people that are on the call, which is exciting. But we'll just kick it off and go from there. So I'll start introducing myself and then open it up to our panel here. So my name is Andrea Perdomo. I am the network catalyst here at Techstars, and my focus is on diversity, equity, and inclusion. So I actually work really closely with both of our guests today, and really excited to just invite you all into conversations that we have been having around the topic of diversity, equity, and inclusion, and more importantly, creating access and what that looks like. So super excited to be able to have this conversation today. And then we have David Cohen, give you a chance to introduce yourself in a second. And then Henri from Harlem Capital Partners. So we'll just kick it off. David, you want to do a quick intro and maybe something you're looking forward to for our chat today?
Sure. Yeah, excited to be here. Been looking forward to this one. And I'm David Cohen. I'm one of the co-founders of Techstars. It's hard to believe that was 13 years or so ago now that we started the company. I'm a managing partner, and my focus is primarily on the investments that we make and the capital we have around the system, but really sort of play that founder role, always trying to bring new ideas and help the team any way I can. So really excited to be here today to learn from the questions that get asked. I always learn from what people are interested in hearing about, and hearing the perspectives that the two of you have. So excited about it.
Cool.
Great. And then Henri, if you want to give us an intro, that would be great.
Yeah, I'm Henri Pierre-Jacques, originally from Detroit, Michigan, which is where I am now. Back home, I went to Northwestern for undergrad, and then kind of did a finance track, 2 years of investment banking, 2 years of private equity at a Black-owned firm where I met my partner, Jared. Graduated from Harvard Business School, April 2019. So last year, we started Harlem Capital 4.5 years ago as an angel syndicate. And once we got to business school, we were roommates, decided that we felt like there were no other funds in the ecosystem doing exactly what we wanted. And so we launched our fund between first and second year of school, June of 2018, and we closed the fund November of 19 last year at 40 million. We focus purely on diverse founders and women founders.
Great. Yeah, thank you. Thank you both again for being here. So like I mentioned, we're gonna, there's a wide range of topics that I know we're going to discuss. I have some prepared questions some of the panelists don't know about, so it's exciting. And then we are going to open it up for you all. So like I said, if you have any questions, please use the ask a question at the bottom, and we will make sure to get to as many questions as we can before the end of our time. So with that, I'll just kick it off and open it up to both of you. We are talking about the capital gaps that exist, and I think we all know that they're there. But in your opinion, why do we see these gaps? And I know there's a lot there, but I'll let you jump in so we can kind of start there of how did we get here and what's going on.
Yeah, I can start. So I think I've seen two capital gaps largely. One first is the pre-seed. I think, now people, when they say early stage, they typically say we're pre-series A, just because nobody knows what seed and seed plus and all of it means anymore. But I think from a pre-seed perspective, you really do see a gap. There's only, when we think about the pre-seed funds that we work with, there's only a handful that we think are like true pre-seed funds. And as seed funds continue to get larger and larger, and Series A funds are doing more seed deals, unless you're doing a $3 million plus seed round, it's really tough for these funds to write checks into your rounds because they're ownership targets. And so I think there's definitely a gap from an early stage perspective, and firms like Precursor with Charles Hudson and BetaWorks and Bloomberg Beta are some of the ones that we worked with the most and have been pretty consistent at staying at the pre-seed level, but a lot of funds continue to move upwards. I think secondly, when I think about, the challenge of, particularly for diverse founders, oftentimes we see them in industries that are not higher revenue multiples. And so, for us, we usually are focused on revenue multiples of like 5x or higher, which makes it tough for the ed tech space, which typically is 3 to 4x. You see a couple ed tech deals above that range, but not as many. Consumer products, which a lot of diverse founders are in terms of like goods that you would find in a retail store, or beauty products, etc. The beauty product space is typically 2 to 4x revenue as well. And what that means is that the investor has to believe that you're going to get a ton of revenue in order for the exits to actually happen. So, a $50 million exit for a consumer product at a 3x is a $150 million exit, versus if you're talking $50 million revenue for enterprise at 9x, that's a $400 million exit. And so the multiples for the spaces do matter. I think we've seen that. We didn't fully appreciate that until we actually had the fund and started talking to other funds, realizing oh, this is why software is so hot in venture. It's really about the multiples that people care about the most. And so that excludes a lot of sectors where you see a lot of diverse founders going to, because those multiple spaces are so low. And so we're trying to figure out, what can we do to make sure we can still reach those multiples in those different industry verticals, even if it's not the high multiples that many firms look for. I think that's a challenge, because the ecosystem is so based on other investors. It's not just you. We can't do that by ourselves. And so it's something I think the whole ecosystem needs to think about as a whole. And the answer might not be venture capital. The answer may be a different asset class, and you're seeing that for revenue share funds and other funds. And I think it's something that people should be thinking about a little bit more.
That's an awesome summation. Totally would go to the same place naturally. I think things like revenue loans, right, are starting to become more common out there. They're still not common, but they're getting there. I think that's an interesting sort of new way to play against a real revenue opportunity that maybe the investor doesn't necessarily see the same scale potential, at least at first. So I think that is interesting, and a gap that can help here, or can help fill a gap here. I think my perspective is from where I'm sitting, there appears to be a lot of capital in the market in general, and so the gap is more, is that being fairly and equitably distributed, right, to people that have opportunity that should attract that capital, and that answer is no, and that's really, I think, more the gap we're talking about. When we hear sometimes, what's the capital gap in the venture industry, we think about what round, right? Is the gap sort of between A and B, or is it, at pre-seed, as you're talking about, Henri? And I think, yes, those are at times real things that gap moves around for capital. But, I think really the discussion here is about how do we get the capital in the hands of people that deserve it, right? Generally and more equitably. So, when I think about the community of diverse founders around Techstars that we've been talking to, there's a lot of talk about, many people have the opportunity to have friends and family money, for example. And some founders I've talked to said, I don't necessarily have that opportunity. So there's a gap there too, right? Which, as you're saying, that's sort of pre-seed, but it's a little bit less of an institutional or fund-based pre-seed. So finding ways to, substitute for friends and family money where it's not available, just the believer that's willing to, put $25K into somebody's hands to sort of get going and explore a little bit before even a pre-seed round, I think, is another sort of dimension of this.
Pre-seed.
Yeah. Me, I like to go early, right?
Yeah, thank you both. And I'll chime in a little bit too. I think we're in a very interesting time, right, where there's been a lot of inequalities that I think most of us here, actually all here on the call, have been very aware of. And so it does feel like I'll kind of even speak to the partnership, and I'll let you all chime in about that, is we created a partnership between Techstars and Harlem Capital Partners back in October, specifically to address some of these gaps. And so, I'll kind of open that up to both of you, as well as how did this partnership come to fruition? I think there's a lot of alignment, but I always find it really interesting to just be able to share that with some of our viewers too. Henry, I don't know if you want to take that one.
Yeah, since we approached you guys. So we actually were having our mid-year review June of 2019. And as we knew we were going to raise more capital for our fund, we began to realize we have to go earlier and earlier. So initially we were post-revenue only. We still largely do post-revenue, but we've done some pre-revenue deals. And so I think just from like a fund dynamic side, we're realizing, hey, we need to go earlier and earlier. What are the schools we want to do partnerships? What are the accelerators we want to partner with from a funnel perspective to make sure we can reach these founders sooner? And when we thought about the accelerator funnel, for us, it was, the top 3 accelerators in our view are you guys, YC, and 500 startups. And who's most aligned with, if we're going to partner with somebody, we want to partner with the best firms. And so who's most aligned with what we want in the accelerator space? And we thought about, we've invested in 11 cities as of now, with New York, LA, and Boston being our top 3. We've invested in 11 industries, with software, fintech, HR tech being our top 3. So we're pretty agnostic. We like that Techstars had multiple cities across the country. When we looked at our companies, a third of our companies, so we've invested in 15 companies so far, 5 of them are Techstars companies. So it already was clear that we liked Techstars businesses. We looked at different cities like LA and Austin and New York for the Techstars programs. We were seeing 50% plus women and diverse founders in those classes, compared to somebody like YC where it's kind of 12%, right? Or in YC, they're largely SF concentrated versus Techstars has hubs all across the country. And so I think just given our model, like if we were in Andreessen, which is 90% SF portfolio, then obviously YC probably is more aligned from a geographic standpoint. But just for us personally, we're geographically dispersed and we're obviously focused on diverse founders. It was pretty clear when we did our work that Techstars was the top choice from an alignment perspective. And that's why we reach out to you guys to kind of think about what are ways that we can better align ourselves. We're already looking at your guys' companies. We're investing in them. Can we make it more strategic?
The only thing I would add to that briefly is, I think that Techstars is often allergic to, announcing partnerships that aren't doing anything real. And, as Andre said, 5 of 13, I think at the time it was like a third of the portfolio, right? Like we were already doing this. And so the thought was, we can just amplify that, right? We can make it clear that we want to do more of it. But, the sort of strong desire to actually do something, right, that is active. And I think that's bearing out in the partnership. So we hope it goes from 5 to many, many more. That's the goal.
Yeah. And to kind of tie it back to, and I've been, again, very involved with a lot of this is, as we were kind of speaking to a little bit earlier, there is a gap as it relates to funding. And it is difficult, and it is significantly harder for women of color and other underrepresented entrepreneurs to find funding. And so, I'll give Techstars a ton of credit in thinking about, well, how do we support our Techstars alumni that are graduating, that are going to have to face those challenges and face those barriers, and how do we create intentional relationships with firms like Harlem Capital Partners to help us bridge that gap and actually begin to create access to that capital, right? And do it in a way that that's very authentic and involving several people to really take ownership of it. And anything else to add on that? I know that's been really exciting. Again, that it was just in October that we launched that, and we've already seen a great amount of impact happen from that partnership.
Yeah, I think to that point, the last 2 investments we made that were Techstars companies were both Techstars alum. So Repeat, I think, was Techstars 2018. I think Kuru Credit was also 18 or early 19. And so finding we're investing in Techstars companies that aren't just in the existing demo days. I think that's been a nice surprise that we didn't fully think would happen, is a lot of the Techstars alums, even if you graduated from the accelerator, you're still raising a seed or seed plus round, 12 or 18 months out, and we can still be of help there. And so that's been a pleasant surprise that we've seen as well from the alum side.
Makes sense. Is it, order of magnitude more of those than there are in the program, right? And that's going to continue. So I think that's good to hear that that's working as well, right? I think the alums sort of have that affinity with Techstars, and they're looking at, who are we working with and who do we think is great? Y'all are on that list, and I think that hopefully will drive more flow as well.
Yeah, great. So switching gears a little bit, we're talking about supporting underrepresented founders. We are definitely dealing with some unprecedented circumstances as being asked to respond and take action, specifically around COVID-19. And then George Floyd's death has spotlighted the racial inequalities that have existed for hundreds of years here in the U.S., but I don't think exclusively to the U.S. And so I'll just open it up to both of you. What has been your response to recent events, or maybe even reactions that you've had? Anything you'd like to share with our viewers?
I think we could spend the whole time on this, and I know we want to get to people's questions. I mean, it's obviously, I think when we look at our own business and what we do in the world, and all these things that are going on, and, many people sort of realizing it in a sort of internalized way for the first time with something like George Floyd, many others having felt it, their whole lives. It feels like a moment in time that there's this, sort of awakening going on. And I think that the thing that I've tried to do, and I think Techstars is trying to do generally, is to, understand that, our role in the world is we can do our part. We can probably not fix, the police department and, all these different cities and the challenges that are there. But in our swim lane, right, what we do, which is investing in, high growth entrepreneurs, we can do a better job. And so, I think it's trying to be introspective and, sort of quoting Jerry Colonna, who's, someone that I admire that really helps us think about lots of things, not just this, but, Jerry said, how have I been complicit in the conditions that I don't want to see in the world? How have I co-created that? And what can I do about that? And so we look in our swim lane of accelerators and venture capital, and we ask ourselves, what can we do? And I think that is what is happening with a lot of people. And I think that's very positive. So, I'm not going to spend the whole time rattling off all the things we're doing, because as I mentioned earlier, we really want to do them instead of talk about them. I don't think it's a moment to, try to grab PR around it. I think it's a moment to recommit yourself to doing things that actually can have an impact and change the world that we live in and that we operate in. So, obvious things like we'd like our company to be made up of, more diverse people that look like the people that we serve and that we work with. And, we'd like the founder community to be the same, right? And so it's sort of coming up with very real things we can do that will get us there, and not just saying we're going to do it, but do it. And I think that's the challenge for everybody. Is very easy to, post the hashtag and say that, you're on board. But the harder thing is looking back 5 or 10 years from now, what have you done to make yourself better, and try to understand how you've contributed to the problem and what you want to do about that.
Yeah, I think I would be a line, and we always ask ourselves, what are we uniquely qualified to do that others can't do? Because otherwise it's not the highest ROI for anybody's time. So, I mean, obviously as a diversity focused firm, we've been doing this. We're all Black, so we've been living this experience. So it wasn't anything new or shocking for us. And we're not like changing our firm strategy. It's the same strategy we've always had. I think we're trying to figure out how do you accelerate it, because obviously this is a moment in time where things can be accelerated. And I think it's been inspiring to see people's responses, whether it be all of the large corporations taking off of Facebook, Twitter, and Instagram and making Zuckerberg lose $9 billion in a day, or whether it be SoftBank or Andreessen announcing funds. And I had a call with SoftBank yesterday and Andreessen last week with the partners, and we probably wouldn't have got those calls if it wasn't for this moment, right? So it's allowing us as a firm to get access to not only the juniors of these firms, but the partners and the founding partners of these firms, to talk to them and share our perspectives. And we've had that with a number of other firms as well. And same for the media. We were already like a media content focused firm anyway, but the last few weeks it's been just like tons of media reaching out. And so to some extent, you're kind of like, I'm trying to process this myself. I don't really want to talk to you about it. But to other extent, like we have a platform and we're fortunate to have a voice. And so it would be a disservice for us not to use our voice and platform to represent our community during this time. And so I think we've taken the approach of we're going to do the majority of the media to make sure that, part of our community is being heard, because they're not going to be reaching out to other people of color in this industry. And so I think, that's what we've thought is just really how do we accelerate what we're already doing. Today we announced a partnership with the Diversity Marketing Consortium, which is for agencies that are offering $1.5 million to our portfolio companies and other diverse founders that we recommend to them. And so, our view as an industry agnostic firm is that early stage startups, regardless of industry, typically have similar problems: sales and marketing, talent, and cash. And so the sales and marketing is usually a big piece of that. And so if we can get people who know this space better than us to help our companies and other companies of diverse founders to help them better accelerate their sales and marketing strategies, then that's a win for the ecosystem as a whole. And so I think, whether it be Techstars or the DMC or TPG or KKR, like we're going to continue to partner with the best organizations in the areas that we think we are not strongest in to make sure that we can help to build the marketplace and ecosystem. I think this is a time where we're going to be able to do that at a much faster pace because it's obviously top of mind for a lot more organizations. And so we're just focused on continuing to reach out to people, figure out who do we trust, who do we want to align our brands with, and make sure we can do what we're doing, but even faster.
Yeah, no, thank you. And yeah, David, like you said, we could talk about this all day. So, we're definitely, I think, trying to do our part and recommitting and just doing the best we can. I'm going to move on to questions. We actually have about 9. And we'll try to get through as many of these. If you are just joining, there is an ask a question section on your screen. Please ask questions, and you can also vote. So if there are any questions in there that you're like, yes, I really want to hear this answer, make sure to upvote, because we're gonna go through those based on the ones that have the most votes, and then work our way down. So I'll start with the first one, asked by Jim, and the question is, how do we recruit differently to expand the pool of Black candidates for board and executive roles at venture-backed companies?
Yeah, I can start. I think, one thing we're doing now is trying to develop a talent platform. So we just closed our fall intern application process, and we got 1.4 thousand applications for 6 spots. So there's a lot of people who are not going to be able to hire. And so how do we actually begin to use the talent that we're seeing and help that go out to other VC firms that we know are looking for diverse talent, either for the portfolio companies or for their firms themselves as investors? And so that's one thing we can just tangibly do. I think what we tell our founders from their side is you should be at least looking at one person ethnic wise and gender wise for any role in like a first round interview. We have networks, so we can kind of do one-offs where we know a bunch of organizations that can do it. But like long term, you should not be relying on your venture capital firm to help you source diverse talent. You should be partnering with organizations like DevColor or Andela. There's tons of them, Jopwell, et cetera. So find out, based on what your needs are, what are the organizations that best align, so you can actually create institutionalized processes. But I think even when I think about our internal intern process, we know the race, gender, industry, geography of all of our applicants. So if we have 1,400 applicants, usually 60% are men, 40% are women. We have the breakdown by race, which is typically 66% Black or Latino, et cetera. And at each round, we're cutting the race and gender to look at what does that look like from a flow perspective. So obviously it's not going to be perfect alignment, but like if I have 60% people of color in my total applicant pool and I go to 30% in the first round of interviews, like was there any biases there? And we have to also, as ourselves, go back and recut, like, hey, like why did this happen? One thing we found out early on is we had a bias towards finance people, because obviously we have finance backgrounds. So we started asking for industry on our application form, so now we can actually cut by industry. So what are you doing to help remove your biases? I think a lot of people can be deceive that if you are a person of color or a woman, that like you don't have biases in your processes, which is not true, because people of color and women oftentimes are more biased towards people of color and women themselves. And we've spoken to a number of women founders who feel like women partners are harder on them, and same for people of color. The people of color funds are harder on them than others. And so I think, that's something that you shouldn't believe that as a bias, but you should still make sure you're tracking the data to really analyze the processes. And as you go through your funnel, make sure there's at least some level of like cushion that's not too far off from like where your application pool. Now, if the application pool is the issue where you're at 5% of your applicants are women or people of color, then that's a whole different issue where you need to go figure out why is your sourcing funnel messed up. But I think the first start is like at least analyze the existing funnel you have, figure out how can you make sure the flow through is accurate, and then go and work on the sourcing funnel. Because right now people reach out and like, oh, do you have any Black founders? Well, I'm not going to send you my founders like if you haven't gone and like looked at your actual funnel and figured out internally why your system was flawed in the first place. I think a lot of people are just trying to like source more people, but not actually analyzing their already existing processes to figure out where those biases exist before they go out and get new sourcing strategies.
So, hey, Jim, by the way, Jim was the CEO of SendGrid for many years. Henri, that's where the question came from. Did an amazing job building that company. And, I think it's being intentional, right, is a big part of it. And then you'll find that there are ways like the ones you mentioned to, begin to build your network and source. One of the problems with board members is they tend not to be a process that gets run, right? It tends to be, oh, we have an open seat and therefore we know this person and this person feels like it fits and then we're done, right? So it's sort of what your network is, which is, I think, one of the sources of the problem. So, being intentional about it and just echoing what you said about, Stephanie Johnson at CU has done a bunch of research on this, problem around if you just have one diverse candidate, one woman, right, one person of color, right, or whatever the category or dimension is, they become the woman who's applying as opposed to one of the candidates, right, and get talked about that way. So having two, there's good research that shows two or more, at least, candidates will massively increase your chance of picking that candidate. And so again, being intentional about that, I think, is one of the key things.
Yeah, no, that's great. Thank you both. So any other comments on that before we move on to the next question?
Nope.
Nope. Okay. So what advice would you give to a minority trying to break into VC? What opportunities should we be taking advantage of now? And thank you, Virgil, for asking that question.
I got to take this one. I'm sorry.
Go for it.
I'm going to go first. I mean, this is like, Techstars hires these things called managing directors around the world. We have 50 of them. We're growing. This is to me, an interesting training ground for VC, where, if you're a managing director, you're in 3 years going to get 30 investments that you direct, right? 10 per class for 3 years. That's a pretty high velocity way to learn. And so I think, it's not just us, but there are some organizations that do that high velocity investing. Accelerators are an easy example of that, look at those type of roles, because one of the challenges is the industry is very hard to get into in general, right? For anyone, it's basically start your own fund, right? Or, be in some kind of network where somebody understands the skill set you're bringing to the table, or have tremendous success as an entrepreneur, which is easier said than done as a first step. And I think, some of those problems just persist. So when you see opportunities, to be part of a system, like a Techstars, that can be a training ground for learning how to invest early on.
Yes, I mean, I haven't interviewed for venture. And I think to David's point, and I did a tweet about it, like, I don't know if I even could have gotten into venture. And we started our own fund. And when we looked at 200 Black and Latino venture investors. 100 of them were partners at firms, and probably 80 of the 100 were their own funds, right? And so I think particularly for people of color, you see a disproportionate amount of people starting their own micro funds because they cannot make partner at other firms or not even get into the industry. And the case was for Jared and I, we both never worked in venture. And I think it's actually been an advantage because we don't really have that bias of what we think a good venture firm is. I like it personally because we can just build what we think is best regardless of what other people tell us. I think, internships obviously are a big deal, and that's why we have our program. We do it 3 times a year. But when you've got 1,000+ applications for 6, it's obviously a very tight funnel. I would, one of the things that I've realized, so Richard Kirby, who's a founder of E4 Ventures, did a study of all venture capitalists, and 40% of them went to Stanford or Harvard undergrad or business school. Right. It actually was a part of the reason why I went to Harvard for business school, is because I knew how biased the space was, and I didn't want to have any more hurdles to get over. Now, obviously, if you're not at the Harvard or Stanford, which is a very small group, and you're on the other 60%, trying to figure out what are those entry points. I think now is a better time than most, because people are basically anti-Valley at this point, and you've got a lot more institutionalized funds that are starting up. And there was a fund announcement last week with Lightship in Cincinnati. You've got funds in Chicago, Alabama, Mississippi, Atlanta, and so places where you don't have to be in New York or San Francisco. And typically, I would say those funds usually are a little bit more open, and there's just less kind of clutter of competition. And so, based on where you are in your geography, I would first figure out what funds exist in that geography. Can I start there versus like I want to go work at Sequoia or Andreessen? We had one person in my class from Harvard Business School go to Andreessen. Like, it's really hard regardless of where you are. And so trying to figure out from a geographic standpoint, industry side, like what industries do you interested in? Who are those funds? Depending on like your background, race, gender, school, people always have those biases. And so like, are there people who went to my school or who are of the same ethnicity or born from the same city? Reach out to them. Those are the ones I typically respond to on LinkedIn. Like, there's some affinity where I'll like at least take a call or respond to them. And so try to find those ways. It's really hard. I never had to do it, so I can't like tell you a roadmap. We did have, there's a book by one of my friends, Bradley Miles, called Breaking Into Venture. He got into venture when he was in college to work at Stripe VC as a senior at Columbia undergrad. So if you're a graduate, it's a little bit different, but it still has a lot of good tips around how do you break into venture, as a young person in the industry. I think it's a good reference point for a lot of people.
Yeah, that's super helpful, Henri, and I think that's been an ongoing question, right? Because it is very clear that there need to be more individuals within the VC world that can actually make those decisions of who they invest in, and that one of the things that I would just say to everyone is, if that's something you're interested in, learn, reach out, connect to as many people that you can. There's also some amazing grassroots organizations that are probably around you locally that are doing this on potentially a smaller level, but are looking for mentorship or help. And so, just get out there. But this is one of the things that I think is super important too in closing the gap, right? Is how do we get more of those decision makers that are deploying the capital to be women, people of color, et cetera. So, and we're getting a ton of questions, so I'm gonna bundle the next two together and go from there. So one is, what actions do you suggest funds take to see more diversity in deal flow? And very similarly, right, what are the top 3 things that investors can do to diversify our teams and the founders that we look to invest in? So I think we kind of talked about this a little bit of what we can do, but I'll kind of pause there and see if there's any initial thoughts from you all.
From a deal flow perspective, I think, one, be open and transparent. So be very clear about what you're investing. I think too often VC firms don't have websites. They have a landing page. They don't have email addresses. It's not clear what your check size, ownership, industry, and obviously in venture, we're all flexible, right? Like, we typically don't do pre-revenue, but we have a few that we do. So like, everything's obviously flexible in venture, but like, you kind of have your core strike zone. Even if you're in a seed stage agnostic fund, we all have industries we like or don't like. And so we try to be really clear about that, so there's no misalignment. We don't waste our time or the founder's time. We're very transparent. All of our emails on our website. We have all of our criteria, what we look for. If you're not raising at least $1 million, if you don't have at least 500K left in the round, it's not a fit. And so I think a lot of firms don't do that. And the belief before, for some firms that I've spoken to, was, hey, like, it's not about us, it's about the founder, so we don't want to have the press. And I think that's just not a good way to think about it. Another one was, if founders can't get in touch with me through their network, then they're not a founder. Who's able to get customers and sell and hustle and downstream capital. I think that's an institutional barrier and bias as well. And 50% of our deals come directly from management. And last year we did 7 deals. 3 of the 7 deals were inbound from management. So we're actively, and we continue to believe that we'll find good founders outside of our network. As people of color who live in New York and worked in private equity and went to Harvard Business School, like, we don't represent the majority of this country for our demographic. And so what are we doing to reach outside of our networks, to reach people of color who aren't in our networks, which is why we're really proud that we've invested in 11 cities. We're making an investment next week in Indianapolis, which is our first time in Indiana. And so that's really been super beneficial for us. Is like we've seen talent all across the country. To the second point around investors diversify your teams or founders that you invest in, I think the first thing is just like tracking the data. I think I'm always baffled because I come from private equity, which to me is a more institutionalized asset class, and it's been around longer, and the funds are obviously of much larger scale than venture capital. But like we track everything in private equity. And I think the belief at first was, okay, like early stage venture seed, it's all about the founder, there's no data. I think that's fluff. Wing VC did a study, and 65% of seed rounds today that are at least institutional seed rounds have post-revenue, right? So the days of like pre-revenue seed rounds, unless you're a two-time founder or a massive market, are just going away, and they're going to continue to go away as the fund sizes get bigger. So there's more data. People are looking, so analyze that data yourself internally for like, how are you tracking deals? We track the race, gender, geography, industry, who we source it from, et cetera. And so like, I think just the more data you can have, the better off that you'll be. And Josh Coblum in the first round capital, told us like that data doesn't seem valuable today, but in 5 years from now, you'll be like the 5% of that data will be super valuable, and you don't know what those gems will be. And so it's really interesting to look back, and that's why we're doing it. It's not always helpful in the moment, but it's really helpful in the future. So you can go back and analyze your processes.
All I'd add here is I think if you want to see more diverse deal flow in the future, you can start by funding diverse companies. So I would say just do it, to borrow a phrase. You can find momentum in a virtuous cycle by actually committing dollars and doing the thing instead of saying you'd like to do the thing. I think the other way, and it's easy for me to say because we're high velocity, right? We make a lot of investments, 500 a year. And so, we're intentional about let's do that. And we have seen that cycle grow and improve because we're doing it and we're, again, intentional about it. I think the other thing is, we talked about it earlier, but, in your own team, who are the decision makers? Not that that's the only way to affect change, but it's a way. And, we were at Techstars very intentional about 5 years ago about trying to hire more women as managing directors. I think we've roughly hired equal men and women over the last 4 or 5 years into those positions. And lo and behold, it's reflected in the numbers, right? You see more women being funded in the accelerator programs. So I think these are two tactics that, just do it and, think about your own team and who the decision makers are.
Yeah, definitely. I think it sounds like highlights right are like broadening your network, being intentional, and then, just making sure that you're also being, and I think that leads us actually to a great next question. It's getting a lot of votes right now. So I'll just read it out loud. It's a little bit long, so just hang in there if you need me to reread sections of it. So the question is, I think a large challenge with founders of color is that no one tells them bluntly when their business will not scale and is not investable. So they waste time building unscalable businesses that can't put capital to work and so are not investable. How can this change, since investors never want to be this direct because they never want to pass on the next Zuckerberg and not be able to invest later if they miss their chance? Thoughts on this challenge? And that question was from Larry.
Go ahead, David.
I recognize that as a problem in general, I think, with many founders. And I think the answer is you try to be direct. The goal is to help entrepreneurs succeed. And I think this is what we do in the accelerator. When you talk about, who do we find? It's team, right? And I mean, that's team, market progress idea. We've been saying that for 13 years. So we're looking for a team that has an intrinsic motivation to solve a problem. And we want to be really direct with them about, we don't think that this is a big business, or, we think you might find a bigger business over here. But we also want to be clear that we don't know that for sure, right? We don't know all the answers, right? I mean, the Zuckerberg was in the question. It was the 16th social network. No one ever wanted another social network when he started that company. And guess what? People wanted it. A lot of investors were wrong. So I think it's, again, leaning into the people and delivering the service that you should deliver, which is your input, but then backing and supporting the entrepreneur that you believe in over the life of their business. And accelerators can do a good job of that, I think.
Yeah, this is a tough one. I mean, we're pretty blunt with founders, just given we feel like others aren't, and so I think we have to be, to make sure that they have that inside. And a lot of non-diverse founders have friends who work in venture, and they can kind of get inputs before they actually launch a fundraise process, and that's not always true for people of color. And so we feel like we have an obligation to help them. I mean, one thing we do is we kind of have 3 phases of diligence. Our pre-memo is kind of like, we like the deal, we're trying to decide, do we want to go to a full team call with the founder. It's usually 8 to 10 slides. Our memos are longer than almost every VC fund because of our private equity backgrounds. And if we do a full team call and we decide to go to committee, we do like a 40 to 50 page memo. And so even if we get to any one of those memos, if we pass on the founder, we always share the memo with the founder. Like, we remove confidential stuff like our motto, and we kind of black out the investor and customer names, but we always share. And then if we invest in the company, we also share our memo, and we have like a launch call where we basically walk through, this is what we thought we liked about you, and this is where we thought you have your risks work from a company perspective. Because we did this in private equity. In private equity, when we bought a company, we had 3-day retreats where we brought in all of our third parties, and we basically walked through, why we gave you a $50 million+ check. Right. And so and that's the benefit of never working in venture, because venture funds typically don't do that. But that's all we kind of knew from private equity. And we found it to be really helpful. Founders typically have always, like, I've never seen an investor memo before. I've never known how investors talk about us or think about our risks. And they find it super helpful. And so that's been one thing that we'll continue to do, and we think it's beneficial. I think, to David's point, whether it be Airbnb or Instagram, like, who would have thought that like photos would be a multi-billion-dollar business, right? And so I think, I always tell founders, like, this is my perspective. Your job as a founder, same as my job as a GP, is to funnel information from various people and make a decision. Like, people are paying you to make a decision. When we started launching our fund, people said, why would you be diversity focused? Why don't you just be diverse GPs who have a more diverse portfolio? Or, you've never worked in venture, like, what do you know about venture capital coming from private equity? These are coming from like mentors and people I've known for many years. And so if I had listened to them, I would be another software early stage fund run by a Black person, not doing what I actually cared about and not believing in the market. And I'm glad I didn't listen to them. Right. And so, like, your job is to figure out who you want to listen to and who not to. The majority of venture capitalists don't know what they're doing. Right. 80% of VC funds make less than 1x their money. So 8 out of 10 people you talk to don't actually know how to make money in venture. And so I think, take that with a caveat, understand that, similar to us, we're a first time fund. We think we know what we're doing, but we don't know. This is probably, my guess, 50+% of venture capitalists' first recession ever. So people have been kind of just winning because the market's been more bold than ever before. And a lot of VCs are for the first time having to actually do bridge rounds and do reserve analysis and give higher losses, right? And so I think, understand also that a lot of VCs don't know what they're doing. They haven't been through a recession. I think that, to me, for me personally, like, gave me a lot of freedom. Like, I don't know what I'm doing, but most people don't either, right? And so I'm going to do what I think is best, because that's what my LPs gave me their capital for. I think it's the same thing for you as a founder. Like, if some people believe in you, and a VC tells you no, like, then, it is what it is. Like, you make that decision. Do you want to pivot or do you not? But I think it's really hard when all you're doing is listening to other people. And, we had a call last week with a titan in the industry, and we asked them, what trait have you seen consistently for top founders? And his reply was, people who listen to themselves. He said, if I go into a meeting, I make a comment about something, and the founder adjusts or kind of steps back a little bit, immediately, I know they're not the founder who we want to back, right? Because you're looking for people who have undeniable conviction to go do things that people have never done before. And so I think that is very powerful. And it's something that we had to have as one of the first racially focused firms. Like, we had to not listen to people who had been doing this for longer than us, who had more money than us, and saying, okay, great, you're not a fit for us, but we're going to go do this anyway. Right. And so I think that experience for us has been beneficial, because now we understand the founder journey of how to make a deck, ask people for money, versus like when I was in private equity, I was just an investor. Decks were just coming across my desk. It was super easy to have opinions, but I never actually had done it before. And I think, if you're not a founder, which I've never been a founder, but I think if you're a founder of a fund, you can empathize more and understand what that experience is like. And I think that's given me better perspective on how to share that voice with founders themselves as well.
Yeah, thank you both. And I think for many of you, I actually was a founder. So or am. I think you're an entrepreneur for life. And we faced a lot of that. Some people were very brutally honest of like, we just don't think your business will ever make it. It's not worth it. And then others, were very excited, but then never actually invested, which was probably more frustrating, I think, than the investors that were very honest with us. But all in all, kind of what you were saying, Henri, is like, how do I prove people wrong? And there's a little bit of tenacity and, that has to go into that of, well, I know the market, like this is something that I started, I truly believe in. So how do you do that? And how do you do that with data and actually go to investors that are going to appreciate that and want to be involved? And then on the flip side of that, I think our business was in hardware, so it was a little different. We needed a lot of capital. But there are some businesses, even if ours wasn't, if ours had been a SaaS product or anything like that, there's other funding options that exist. And I don't think we talk about that enough, right? We did 2 Techstars accelerators. There's the VC route. There's also, there's different options out there. So if you are starting a company and you're having those questions, happy to chat about, my own experience. And I know David, same thing. There's lots of founders that go through that. And then you're just at different stages too. So just wanted to kind of offer that up.
And just to the point about advice. So we launched in June of 2018. We had our first pitch to Billionaire in July of 2018. And at the end of the meeting, we were, Jared is our closer. He ends the meeting and kind of makes the ask, like, what's your actual call to action? And we hesitated, right? We said, hey, we'd love for you to be an investor. If not, then we'd love for you to be a partner or an advisor. And his immediate response is, advice is cheap, get the money. And that changed our entire mindset, because we realized we've gotten to a point where we don't want any more advice. And people who are giving you advice who aren't investing either real time or real dollars, I personally don't take their advice as much. And so to your point of investors who are excited and they're kind of faking you, but they don't actually write the check, versus being blunt, this is the reason I didn't invest, take what you will. I think take that to a grain of heart, because you get to a point where you no longer need advice, particularly for founders of color. All people want to do is give you advice, either cut the check or move on. And that became our view personally as well when we were fundraising. We're great, you're institutional fund to funds and you have all your stats and you're telling us it's great. You're not giving us money, next, we're moving on, we'll figure out what we want to do, but we're going to make it happen. And once we had that mindset change, I think the confidence went up, and also the respect from people goes up, because you go into a meeting and we would then ask, why should we take your money? What's the alignment with you, versus always letting them ask the questions. It was kind of why are we going to allow this partnership to happen? I think that's really powerful. And you can be afraid to do that because you're in a position where the person who has money always seems smarter because they have the money, but it's not always true. I think it's a mind shift for us that was helpful, and that was one of our first $1 million checks was from him. It took somebody else believing in us and also saying that statement to change our mind shift. And I hope that other founders also will have that similar mind shift as well.
Yeah, no, that's super helpful. Lots of applause going on and hoorays. So this is another good one, and maybe David, we'll start with you. And this came from our YouTube feed. So hi, YouTube followers, if you're watching. So do you think that targeted accelerators will help close the capital gap?
Super interesting one, because I certainly think it can be part of the solution. Again, I think it takes a lot of people rowing together to solve this. It doesn't come from one group or one sort of approach. But in our exploration of this, even internally at Techstars, it's super interesting to dig into this, because you see Google doing specific accelerators targeting specific groups, and it's awesome and well received, and it should be. And there are certainly other organizations, some people have commented on the question, with the other organizations that have that focus. When we spoke to our community, there was an extremely negative reaction to the idea that we have an accelerator, say, for women or for Black founders, and I think we were pretty surprised by that. But it was quite consistent Of course, there are people that have the opposite view. That's always the case. And again, to Henri's point, you have to make a decision. And I think our decision was, let's just do better with the footprint and the platform that we have. What we heard from founders that we spoke to was, I wouldn't apply to that. I don't want to go to a special context of Techstars, right? And sort of be in a group that feels somehow secondary to the main group. I want to be in the accelerator that I want to apply to in New York or LA or wherever it is. We heard that really loud and clear. And so we've sort of redoubled our efforts to just do better with sourcing and, funding and who our team is in those programs that we already have. Now, that is not in any way to say that others should not do that. I think it's very valuable that others do that. But it's interesting where you have a platform that you can already leverage. There perhaps is a better way to leverage it than just sort of offering a special context.
Yeah, and I tend to agree. And I've had conversations with other firms like SoftBank or Comcast who have sub funds. I think the way the market views it is, if you were a diversity focused accelerator like Camelback, or diversity focused fund like us or SoGal or Female Founders Fund, etc., like, you as a firm are making the bet that you will make outsized returns on this market, and that's why it is your sole thesis, right? There's no questions around like, are you doing this to make money, right? But if you are a larger organization and you create sub-vertical funds or sub-vertical accelerators to do it, it's not clear that you think that it's in the same bucket, right? It's like, here's our main fund of whatever, and then here's our sub-fund for this group of gender or racially focused. So the market will not perceive it. So I think the difference is your sole mission to focus on diversity, either as a fund or an accelerator, or just a sub-fund. I don't think sub-funds work as well. I don't think when people see them on the cap table, they respect them as much. And I don't think it's beneficial for the founders, because it's a bad signaling for them as well, for the organization. Like, this is not the core belief in what you think makes you money. If you're an accelerator venture fund, your goal is to make money, to have more startups raise more capital, have more exits. And so there shouldn't be subcultures, in my opinion. But I think if you're an organization where your focus is, we want to have impact while making money, and that's our entire thesis and mission, and we think we can do both at the same time, the market will perceive it very differently. I think that's a conversation that I've had with other larger funds that have these sub funds that I think is not beneficial to the market as an ecosystem as a whole. I think people kind of get them construed on, okay, well, does that mean that there should be no gender focused or diversity focused funds or accelerators? I don't think that's true, because they have a completely different thesis, and that's fully how they're appearing to the market and how they believe they'll make money.
Yeah, no, that's helpful. And I think a little bit on that, someone asked the question, other than Harlem Capital, which diversity-focused VCs would you recommend to early-stage founders of color? I don't know if there's any, Henri, that you recommend for other folks.
So we had a report we put out in February for Black History Month, our diverse founder report, where we looked at 200 Black and Latino founders who raised at least $1 million or more. So there's an investor list in there in the back, like the last page, at least the top 12. I think we posted publicly. I would say one reason we started Harlem Capital is because we realized most diversity-focused funds were gender-focused. So Female Founders Fund, BBG, SoGal, etc., January Ventures, and we didn't see a lot of people actually focus on racially companies-backed founders. And so there are not many racially focused company or funds. Catalyst Fund, which is of Comcast, is one of them. Lightship was another one that just got announced last week, $50 million fund based in Cincinnati. Besides those, there's not a ton. I mean, there are diverse GPs, which you can look into our Power 200 report, which we released last year, which showed 200 Black and Latino venture capitalists. So I would look at that fund list, because typically Black and Latino GPs typically have higher portfolios that are diverse. So whether that's Charles at Precursor, or Aaron and Namdi at 645 Ventures, or Marlon at Cross Cultures, or now Mac VC since they merged, their portfolios are typically more diverse. So look at our Power 200 report if you want to get a list of who are diverse people, and look at the funds in the back, and that will typically tell you where there's a higher probability that those portfolios are more diverse than others. But there are not a lot of racially focused funds. Most diversity funds today are gender focused, unfortunately.
Great resource, great list. I mean, it's always a struggle to call out, specific investors, but I'll just share that I've personally learned a lot and been inspired by Kapor Capital and the work they've done. I know they've been working on this for a long time, doing it for a long time. And, I think, not commentary on, who's better or, not better or whatever, but I think that, they've been very genuine about it. We've learned a lot from them. So it's another one I'd mention in addition to the ones that are in response to the question or that you've mentioned, Henri.
I agree. Brian Dixon there is great.
Yeah, there's definitely a lot of great answers and comments. So we're at about 5 minutes. I'm going to ask this last question. It's a bit of a heavy one, but I think important for us to address, and then we'll just leave it for closing remarks. So the question is from Muri. During my education on this topic, it seems that this is a problem created by white folks, and perhaps for white people to take the majority of the burden to solve. However, there are many within the Black, Indigenous, people of color community who have far greater knowledge of this topic and could add a lot of value to the process of change. How do we manage the tension between those things?
Not easy answer.
Yeah, I mean, my reaction to it is, you use the word tension, I use the word opportunity to work together. And, I think that if we're, sitting around as Techstars and we look at ourselves today and, we want to affect change or whatever the organization is, it's looking at yourself. I mean, obviously, what we preach is surround yourself with incredible mentors, right? That can help you understand the path forward and learn from, their mistakes, their successes. And, we should take our own advice, right? And go and find people that do have, direct experiences rather than guessing. And I see it every day internally at Techstars. I know we probably have some employees watching, very passionate employees that want to do something to help and are very demanding. We should go do X. But when you actually talk to the people that you're trying to bring into the system or, diverse founders, this and that's not what you would do. And so there's that tension. And so I think it's an opportunity and feels like a moment in time to take advantage of that type of network and opportunity to learn from others.
Yeah, I think you need both. So I think obviously we need people of color to move up the ranks at top firms like Andreessen, Sequoia, et cetera. But I also think you need GPs of color to start their own funds, either to be diversity focused or not. Because I think even if you're not diversity focused, you will be more diverse than most funds in the market. I think in the short term, the faster way will be for people of color GPs to start their own funds. Just given the cycle of venture, right? If you get into one of these big funds as a junior person, good luck becoming a partner of any race or gender, given how long these fund cycles are, 10 years, and partners are staying at their funds for longer and longer for a variety of reasons. And so I think that's a very long game. And I saw it in my entire career. I was the only Black person in my 42-person group in investment banking. And there was no Black seniors on my entire floor. And so I always knew, like, right away when I got into banking, that this was not going to be where I wanted to be, and likely not where I would flourish, and people would support me. And I went to a private equity firm, which was a Black-run private equity firm called ICV Partners, which is really what inspired Harlem Capital. We started it when we were ICV. So it was the first time I saw Black people manage $1 billion plus AUM. It's the third largest Black-owned PE firm in the country, and it was just super inspiring to see what could be done. And many of us just don't know that it even exists and is possible. And so for me, I always knew I was going to start my own thing. I didn't think it'd be this early, under 30, but it was always in my mindset. I just think you need a combination of both. You need some people who are going to fight and go through the struggle of having to be the only Black person at firms, which sucks. And you need other people to go and just do their own thing. I think the short term, you'll see more light ships. There's another fund called New Era with Ladante, who's starting a $20 million fund focused on people of color. He's raising now. I think that will be much faster approach than the larger fund. But I think long term, you will need people of color at these larger firms. But I think it's a combination of both for the short term and the long term.
Yeah, no, that's great. So we're about at time. 1 minute left. Any final thoughts from either of you? And thank you for everyone who joined as well.
I'll share the same final thought I always do, which is, thank you for participating in the conversation. And I'll share how to reach me. I'm David at techstars.com. Happy to, sort of engage with anybody directly on stuff. And just a huge thank you to our community that has been blunt and direct with us. It's what's needed. and it's appreciated, and I hope more people will do it. So thanks for that.
Yeah, it's a long game and venture, period. It's a long game to change institutional barriers. These are century-old institutionalized systemic racism. And so I think applaud for the short terms, things that organizations are doing and creating funds and stuff, but it is nothing to, like, it's not going to change its scale in the short term. This is going to be daily things that you're doing every day over years to change generations. And so I think give yourself the breath and the space to endure the marathon that it will be, but continue to push people to sprint for short-term change, but also understand, like, I'm personally looking for, a year out, 2 years out, all these companies who made these statements and said these things, where are you at? And I'm cautiously optimistic, but I think it's a very long game, and it's going to take a lot of work and a lot of daily things to get over something that's been so ingrained in the country. There was a poster board that my pastor had during a protest I thought was interesting. And he said, it's interesting that the protest against racism feels like a protest against America because it's so ingrained into who this country is. And so I think that's something that really resonated with me. And there's a lot of things we have to do to change that, but it is very ingrained in its culture, and will take a long fight for us to get through this.
Yeah, no, absolutely. And like both of you said, thank you all for joining and being a part of this conversation. This is definitely where we start, does not end here. And like David said, feel free to reach out, continue to engage. And like Henri said, this is a battle that we're all fighting for every day. And so, just excited to be a part of it and help support. So, at that, we'll cut the session. But thank you all for joining. Thank you for being here. And I'm sure there will be more of these sessions to come. So thank you all. Have a good one.
Thanks.